Good evening, guys. Good evening. And yes, a big warm welcome to all of you. Thank you for joining me. My name is Adam. I'm one of the traders and analysts with Trade with Precision. And the first thing I would like to do is check if you can hear me okay. I've got green lights over here. Everything should be good. Just to check. And I recognize a few of the names. Always good to have regulars coming back. And just, yeah, if you can let me know. Thank you very much, John. Appreciate it. So the title, the topic, the theme for this evening is the commodities market, insight on the golden trades. And really what I want to do is dive deep into commodities markets, do some analysis on them and see if there are any opportunities and where those lie and how to go about approaching them. While you read the risk disclaimer, I want to give you a moment to do that. This is being recorded. It is being recorded. Don't hold me to this, but do you receive, normally you should get a follow-up email that gives you an access to the recording. Failing that, I'll give you my email address at the end and you can just send me an email and I'll send you the link for the recording afterwards, okay? So while you're reading the risk disclaimer, I'll give you some background behind myself. I'm based in the UK. I trade client funds. I trade my own capital. So I trade for a living. That's really where most of my income comes from. And I'm a technical trader and a trend-based trader. So that means I focus on trending markets and technical signals. All right, I've been doing that professionally at least since 2014. And I enjoy it very, very much. So I'd love for this to be as interactive as possible. If you have any questions, please feel free to ask as we go through. Okay. On the agenda, we're going to be having a look at which commodities are favorable during economic hardship, live charts analysis for gold and silver, and potential future price movements on multiple timeframes, and a watch list for traders to consider. Right, so that gives us plenty to talk about. And what I'm going to do, just give me some feedback, by the way. How many of you use the browser-based CTrader platform? And how many of you use NT4 or NT5? The last time I asked that question, most people came back and said they use NT4, NT5. So if you could just let me know that, I'd be curious to hear which one is the most widely used. I'm always just curious to know. Okay, we've got NT4, NT5. Okay, basically, for those of you who use NT4, NT5 is 98% the same. So you would have no problem moving over to NT5 if you did. I'm going to do it on NT5, but I use, if you're interested, I use NT4 for most of my trading. So actually, I'm an NT4 user, but I'll be doing this on NT5. It's really easy and it's for the benefit of those people who use it. Okay. Just want to do something here quickly. Just quickly trying to what's it called? Just quickly trying to send a message quickly. Oh, that's it. We can try that. Right. So that was just doing personal stuff while we chat. Sorry, I wanted to do it. Okay. So I've got both the trader open, both platforms open. I'm comfortable using any. It's quite interesting because the first the first platform you learn to use is very intimidating. The second one is also a bit, but by the time you're kind of doing your fourth or fifth one, you find that there's a rhythm to any platform. It's just, you got to know where certain things are. And I've probably played on about 25 different platforms at this time. And then I've got the NT5, we'll do the NT5 one as well. Okay, so let's go through and have a look at, first of all, what's going on. Now, if you've attended any of the other bits and pieces that I do, you'll notice that usually one of the first things that I'll do is talk about, we need to get a sense of what's going on with the dollar. So the US dollar is very strong at the moment. It's very much pushing against, the limit. So when you have a look, say for example, at euro dollar, the euro dollar is right down at the bottom of a range that it has been at for a very long time. Okay, so the last time kind of it broke through here would be if I had to go through, and actually funny enough, I just went ahead and said that you'd be able to find this. Anything not showing here? No. Let's just go through to this one here. And And the last time we were sort of started to breach through this area, that was 2002. So 20 years ago, if we break through this level. Now, it's possible, it can happen. We've got sort of lower highs and lower lows, so it is leaning that way. But at the same time, we've had rejections of these areas. We have got, if we're going to have a look at this, we've got a little bit of bullish divergence starting to creep in here. So we've got equal lows, slightly more bullish here. We'll have to see how that goes. But we are sitting at a big line in the sand. So I bring this up because we could be about to enter, let's call it a new age, or a new, kind of, as we go through these phases, the markets change. So, whether we're having a bear market or bull market, we could be going through something like that, and all of it is connected. So essentially the dollar itself is at a major level, 105, and it's potentially looking to break through that. If we see that the euro dollar breaks through this level, we could see it heading down towards parity. Okay, so parity as a price level is going to be, there we go. It's one, that's parity. We could see that at the very least, because relatively quick for it to get there. It could even go a little bit further. We could see that dollar getting quite strong. So if we compare it, if we go and have a look at this, just to give you a sense of that, if we go and look at GBP on the monthly, just let that data load up when it's ready. And you can see here it's also at an edge, and it'll be the same with the Australian dollar, the Kiwi dollar, and a few of the other ones, dollar Swissy as well. They're all sitting on a bit of a cliff edge here. Now, I didn't know this. I was watching a Ray Dalio video earlier today, and I respect him. He's Bridgewater Associates. He's a relatively common sense investor, and he was talking about how actually in 1945 the US emerged, obviously, as the kind of the let's call it the New World Order, just meaning the most powerful country, And I didn't know this, but in 1945 they had something like 90% of the wealth on the planet. They had it, which is crazy to think about that. And so today, whereas today it's kind of almost number 2 now, with China catching up. So there's just a lot of there's just quite a bit going on. And so with the fears of inflation and the interest rate hikes, now when interest rates are raised on a currency, it tends to strengthen the currency. All right. So what happens is, as soon as as a central bank has a higher interest rate, that tends to strengthen the currency. It's a generalization, but it's generally true. And so with the responses to inflation, usually the thing is to calm inflation down, which is to raise interest rates, which then strengthens the currency. Now, all the countries are going to have to do that, because inflation right now is a global sort of, let's call it, epidemic, and certainly something that has to be dealt with. And so we will see responses to that. We will see, the euro and the pound, central banks as well, Bank of England, we will see them start to strengthen it. It'll balance out. But for now, what we're seeing is predominantly strengthening of the US dollar. Now, not only that, but obviously, because this gets us to inflation. This is where I'm going with this. But that dollar is at quite a major level. And if we see a breakthrough, we could also see this shift potentially into a sort of a new level. If we break out of this range, because we've been range bound for a while, if we break out of this range, we could see some significant moves. Now, the good news with interest rate hikes on currencies, ladies and gentlemen, is that they tend to produce really nice, long, sustainable trends. Meaning, when I was sort of getting into the game, when I was learning how to trade, which was kind of sort of around about 2009, let's kind of put it somewhere there, let's do that. Somewhere around this time, we used to get these very long sustained moves, okay, for, a year at a time, or very long ones. Then we kind of, after this big move down, and actually from around about 2014, but we've been largely range bound. Okay, on a lot of currencies, like pound CAD, pound Aussie, all these different ones have been on a monthly basis, have been largely range bound, and not that great. We used to have these beautiful sustained trends on the daily, where it would go up for 3 or 4 days, come back 1 or 2 days, and it was just very rhythmical, and there was some great sustained trends. We haven't really had that for a while. And part of that is because prior to 2014, we had higher interest rates, between Japan and Australia. So what would happen is there would be this flow. The big institutions, hedge funds, institutions, and banks would do what was called a carry trade. So they would borrow money, for example, where Japan, the interest rate was, say, 0.5 point, and Australia, where maybe it was 5.6 or something, then they would borrow Japan and lend to Australia. So you'd get like an Aussie yen carry trade. And that would create this flow. And then we had euro yen, Euro Swissy, we had these amazing flows. And so this again comes from, we're talking now about dollar strength being on a cliff edge tied to inflation. If the dollar strengthens, that's obviously going to feed, the two are going to feed off each other. Plus, I wanted to talk about how that's going to impact the currency markets and also what that's going to do to commodities. So if we're going to have a look at, say, Euro Yen, bring that up and look at it, you can just see how we used to have really long sustained moves all the way back here and also all the way back here, and then just less and less and less and less until sort of where we are now. And we can see it starting to push outside of that. There was a bit of a range. If we look sort of do this, we had a bit of a range here. So there we go. And we're starting to break out of the range. So it seems to me, and dollar and dollar yen has actually already done that as well. And dollar yen, I mean, this is actually frightening how much it's actually moved, but dollar yen has already broken outside of that range. So I see it as both a scary thing, but also a good thing, because prior to the last 4 or 5 years, the markets did used to move. We've had big moves like this before, but we've also had these kind of crazy range bounds. So this would have been the top of the bar and the bottom of the range respectively, somewhere like that. So we would have been in this range again from about 2014, and we've been stuck in it. We've only now just started to break free, and you can see the kind of move that happens when you break free of that range. We could see something similar with that dollar. Now, so this is just something to bear in mind because it's happening. This is a real thing that's actually happening. We're starting to see currency start to move, and we're seeing some big sustained ones. What else have we got? If we look at something like pound Swissy before I go and just have a look at that on a much higher time frame basis, you can see it's just starting to test these monthly lows and push beyond those kind of boundaries. And again, this will lead to other stuff. Sorry, this is important to talk about this because it's going to come up. Some of you may be new and you may not know that the Swiss National Bank has intervened in the past, has intervened over here and over here. They kept intervening because, again, we used to have these beautiful, long, sustained, beautiful trends, just so consistent like clockwork, and trading was easier then. So kind of making money on stocks is easy in a bull market because you think you're a genius, but meanwhile, a rising tide lifts all boats. Same thing here. We used to, trading was a lot easier back then before it sort of started to change. So the Swiss National Bank, there's a long story behind it. I recommend that you actually either YouTube it or Google what the story was between it, but they had to intervene. And so initially they intervened at least once here. Then they decided to peg the chart that really kind of shows you this stuff, because these are new dangers. And again, this might actually start to become an issue that we have to deal with again. So especially with Euro Swissy, I'll just wait for this one to come in. And so we just have to be careful because the Bank of Japan and the Swiss National Bank, they have this terrible habit of intervening if they don't like the way their currency is going. And the result in this particular case is that it often results in kind of breaking the currency markets here. So you can see this was this long sustained move down on Euro Swissy. It was just like clockwork. And then they intervened. Then they set this line in the sand. It was at 1.2. They set this line in the sand, and the market just kept doing that. So it wasn't really intentional, but just the day-to-day trading was just pushing it and pushing and pushing it. They got to a point, and I was trading that morning, where they then de-pegged it. So they'd sort of pegged it there, but they were actually paying out of their own, traders and their bank were keeping it above that line there. And then, of course, what happened was they just de-pegged it. They just let it free fall. And so the market gapped down like this. And I was around that day. This was not that long ago, guys. This was like January, February, March 2014. And the market just broke the market. The banks wouldn't even pick up their phones. It broke everything. And it wasn't very smart, and they didn't warn anyone. So I'm just telling you this because you can see how the market came back to that level here, boom, and rejected it, right? And is coming back down and is right now pushing at these lows. So if they intervened here and then they de-pegged here and we have that level, I would say where we are is something we need to be concerned about. So you take all of that with the dollar strength, and all of this behavior appears to be kind of linked. There's definitely a movement towards certain things. So now that we've got a sense of what's going on with the dollar, we've got a sense of what's going on with some of the other currencies, we can have a look at commodities. And so let's go ahead and start off with, we'll go and have a look at gold first. We'll bring that up. We'll put silver in here as well so that we can kind of get a sense of that. And also I'm just going to throw in a few others here. We'll have a look at platinum, and we'll have a look at palladium, just to get a sense of general commodities. We'll have a look at oil as well. Okay, so what is significant about gold is that, right? Nobody really cared about. You can actually kind of see where retail trading became a thing, which is somewhere around probably about here, where retail trading started to really come into play. And so gold, similar to sort of Bitcoin and similar to certain other markets, it just was on fire. And I should tell you that at this point, I was there at the time. You know, there were all these PDFs going around, and you better buy gold. It's never coming back down. The world's coming to an end. There was this whole crazy kind of thing, but you better go underground. I'm not kidding you, this is how it was. All kinds of crazy stuff. Anyhow, and so gold, the idea was that it was just never gonna come. And then it started to fail at these points, and then it broke that low. So you can see multiple, there was the high, came down, tried again, failed, tried again, failed, tried again, and failed the third time, and then broke lower. And that was it. It didn't come back after that for a very long time, until I think that was 2019. So from 2011, 2012, it was sitting at this level, just couldn't get out of that. And finally did manage to break above. But if you could imagine, we can only see a monthly chart. But if you could imagine that we could see a yearly chart, what you would generally see is this, a chart that's going up like this. It's pulling back and trying to carry on. It's trying to do that. So it does appear, generally speaking, that it is trying to climb. The levels that we really need to be paying attention to most of the time are relatively round numbers. So for example, we've got, say, 2000 up here. There's like one major level, and we've got 1900 is also a bit of a level here, and then we've got 1800, which is a bit of a level over here. So it's pretty much kind of round numbers based. Most of these levels as well. And so what we're really seeing now is that the market had an overdue acceleration, because it was kind of trapped in here, finally managed to break its way out. And then had a good run up. Became a bit overextended and has come back down a little bit and is kind of going through something at the moment. Tried to go up again, and has taken a hit. So I mention this because this is effectively a double top. And that isn't really so much a concern as this is as well. So we can see the fact is that in both cases, we have what's called divergence. So for those of you who aren't familiar with either a divergence or these indicators here, let me just give you a bit of background. No offense to anyone who already knows how to read them, but just for the benefit of any newbies who are joining us this evening. So if the chart is made up of price over time, so that shows what price is doing over a period of time, these indicators are known as momentum indicators, and they measure the speed of the market over time. All right, so you can, you know, there's CCI, there's Williams percent R, there's stochastics, they all do pretty much the same thing. I put MACD and RSI here with default settings as a double confirmation. Okay, so imagine you're driving in your car, and what you see through your windscreen, everything you see through your windscreen, which is the important stuff, that's the pedestrians and the other cars on the road and the traffic lights and the roundabouts, or, you know, anything that's obviously crucial that you've got to try and not hit or avoid, or where you have to go. If you look down at the dashboard of your car, you'll have, say, a petrol gauge and a speedometer, right? So you've got these two tools that are obviously helpful, but not crucial necessarily. If you temporarily couldn't see your speedometer or your petrol gauge, you could drive just fine. On the other hand, if you did blocked out your windows and you had to use your speedometer and your petrol gauge to drive, you couldn't go anywhere. It would be completely useless. So it's very important to understand that these tools are only there to be used at certain times, only for certain times. And the way we do, the way we use them is for convergence and divergence. So what does that mean? It's really straightforward. The way we do it in the city is, if my price is trending higher, that would mean it's bullish. And I would expect my indicators to also be trending higher. Forget about oversold, forget about overbought, forget about histograms and moving average crossovers and all kinds of other stuff for now. What I'm essentially looking for is for my indicator to be climbing higher and my price to be climbing higher. If both indicators are climbing higher, everything is good. That means that the indicators are bullish, price is bullish, and the trend is healthy. Okay, we have a problem when price is climbing, but for whatever reason, the indicators have started to go lower. Okay, then we get lower highs. So if this is trending down, it's bearish. If this is trending up, it's bullish, and we call that divergence. Okay, because this is bearish, that would be bearish divergence. It indicates that the trend is tired. That's all it does. It just indicates the market's tired and there could be a rejection, but it's very, very reliable at certain points. So let me give an example. When a market starts an uptrend, it's very aggressive, climbs, and then it does a shallow pullback because it's very hungry. It's new and it wants to keep going. So it does another move, and it's not just that. It's the angle at which price moves. If price is going sideways, then it's in a range. If price is going up like this, it's what we call parabolic. It's very aggressive. It's quite strong. So the most sustainable trends tend to be running at about, say, 30 to 45 degrees. They're nice and sustainable. They're just going at a steady pace, and they're much more sustainable. So when this is climbing at quite a strong angle, then what happens is it does another little bit of a shadow pullback, but then it doesn't do as big a high. So suddenly this high is not as big as the previous highs, and then it does a deeper retracement. All right, and then it just breaks to a new high, and then it does a deeper retracement, and then it just breaks to a new high, and it does deeper retracement. So what's actually happening is it's losing momentum. We can see this in the price. You start to, as you become more and more experienced as a trader, you'll start to notice this. You'll instinctively go, I think this trend is losing momentum. It's because you haven't really worked out that your brain is telling you that this is starting to roll over, would be the case. So usually what happens at some point here is either the market consolidates, so it can consolidate and then carry on, or it can consolidate and go down, or it can just change and go down. That's pretty much the only kind of things that it can do. But we don't know which way it's going to go. And so usually what happens is you'd be trading with the trend on the way up, and then when you see that it's starting to lose momentum, you would just stop trading it. The smartest thing to do, just stop trading it. What you're waiting for is for it to now confirm what it's going to do. Is it going to go into a downtrend, at which point you become a seller, or is it going to go back into an uptrend and you can go back to buying? I also think it's very important, I also think it's very important here to talk about the difference between trading and investing, guys. An investment is generally open-ended or longer period. So stocks or buying a property, or buying gold, for example, yes, they would be a longer term investment, and we would expect them to increase in value over time. Trading, on the other hand, a trade is meant to be a shorter term, single-minded objective. So for example, you would not short the stock market as an investment. That's a very silly approach. But you might want to put a trade on that says if the market breaks below a certain point, I'm going to short it at that time. But the thing is, because the markets go up over time, historically, there's no such sensible thing as an investment to the downside. That doesn't make sense. It's a trade. In other words, it's a single move you're looking for. You don't expect the market to be in a bear market for very long, maybe for anywhere from 6 months to 2 or 3 years before it goes back to the bull market. So you'd be doing a sort of a shorter term position on that, and maybe not even that long. So for example, buying gold or buying something on the way up or waiting for it to get out of a consolidation, if it's a shorter term objective, we tend to call it a trade. All right, and once it achieves those objectives, we would exit that trade. It's really important. So when we talk about a hedge against inflation, inflation is a normal part of growth. You get growth and then prices start to increase, then inflation becomes a problem, then we have to raise rates, and then the market takes a bit of a hit as a result of that. I'll explain why in a moment. And then ultimately things calm down again, and then the market starts to build its way back up again. So what that usually means is that when we realize we're hitting a period of inflation, we would usually then take on a trade as opposed to an investment per se, because we're looking for something to tide us over before, while the inflation and while the markets are correcting, while it's doing that. And then we would be looking, normally I would think, to wrap those up. When we return to a bull market or, inflation comes under control, we'd look to exit those things. So I'm talking to you about this because I want to explain how the indicators work. So usually what happens is the indicators, as I said, are measuring the speed of the market. So what they're doing is they'll look at the speed here compared to here. and go, okay, you know what, the market now is not moving as fast here as it was here. And what happens is the indicator will start out bullish when the market's bullish, and as the market starts to roll over, slow down, they will start to drop. It'll just get left behind. The market will still be creating new highs, but the indicator just won't feel the same pull, and it'll get left behind. And so you get this bearish divergence. And so again, we wait. This is crucial. This is not a sell signal. We don't do this. It's we wait for the market to, to respond. Here it's showing exhaustion. We're waiting for it to do that. And then usually what will happen is you'll get a bit of a correction like this. And then of course the MACD is back in line with price as an example. So I bring this up because I also wanted you to see here, we've got effectively a double top. Price came up, rejected it, tried to go up again, rejected it. And the rejection is really important. It's one thing for the market to go up and close kind of like this with, a couple of candles up there. But to have these very strong rejections up here is quite a significant signal, especially the second one. The first time it kind of makes sense. It's a bit overextended, it needs to take a bit of a breather, but the second time it got touched, it really came right back down. And so that's heavy selling at that point. That usually means the market is going to go back to the bottom of the range and or potentially change direction, possibly, when you get that kind of effect. But let's assume for the moment that it's not going to do that. Let's assume that actually we're ultimately going to lead back to the top here. So I want to find a point where there was a breakout. So here we go. Let's do this. We'll do it this one. Here we go. So we had market came up, got knocked back down, tried again, knocked back, tried again, got knocked back down, tried again, knocked back, and then finally broke through. And we had a series of higher lows as it effectively built up pressure and then broke out and then took a run for it. So we could that's to give you an example of something that could happen over here. It means that probably we would get a series of higher lows. So that means that we would get the market doing something along the lines of sort of coming up here, and then potentially breaking out. So all of that, if that is the case, and this is not unlikely, means that we would probably not see a breakout beyond here unless it was an emergency one, something like where something really big happened. We would probably not get that until next year. And what I'd be looking for here is to see price go back up to this level. I'm looking for higher lows. And specifically, I'm going to be looking for it to turn at these major levels. We've got these price levels here, so we can see exactly where it would need to turn. We've seen those in the past. So we'll be looking to turn probably at this level if it's going to do that, and we'd be looking for green candles. Green candles usually, that's what would happen. You'd have a red candle coming down, and then usually a green candle or a rejection wick, and then start to head up. Okay, so you sort of get something like that, or even here we could see again lots of wicks underneath. Those are nice little rejections. Wicks are very powerful in terms of what they tell us. Interesting that in almost all cases here, we get a red candle followed by a green candle. That's not common. What I mean by that is I often see, you could see a green candle. There's nothing, this candle here is red, but it could have been a green one. It's unusual. In all these cases, we seem to get a red one followed by a green one, red one, green one, red one, green one. Just strange. Red one, green one, red one, green one. Here was an indecision candle at the middle. Why wasn't it green? This is an observation I literally just made now, that there were no green ones at the bottom. It always seems to be a red one followed by a green one. Okay, so therefore, it's not unreasonable to think we might see something similar at one of these major levels. And these levels won't really change. Okay, they should stay the same. So we'll be either at this current level here or potentially down here. I would expect to see it and then expect to see it work to the upside. Should it break down below here? Because I said to you that this double top could signify that, or actually if it happened on a 5-minute chart, that's usually what would happen. Should it break down below here and the wicks, you'll see there's a wick rejection here and a wick rejection here. What would change is you would get a candle that closes right down on the edge or breaks through it, so it would not have wicks on it, would indicate that it's probably going to break through that level. If we saw that happen, we would then see gold probably come back down towards these lows here. So all these same levels, they don't change. So I find that very interesting, because if that does happen, it means that the whole story for this is potentially a lot longer. It means that we could be going through something similar to this, where it's going to ping pong around for a while. The thing though is that gold is likely not going to drop too much in value. I'd be very surprised if it came back down here again. I would think that this is the furthest it would go, and even that I think is very unlikely. I would actually think that it's more likely it'll find a bit of a floor here or in this area, potentially in this area, and then start to work its way up. Whether we break out after that is also not the most likely scenario. It'll probably go back up to it, but we could find an, here's a fair kind of thing. You've got a bit of a level here. So you could find that it struggles with this one, but you could have something like this, breaks up through here, and carries on. I suppose that's possible. But those are kind of the clues that we'd be looking for, and therefore I would expect it to go back up. So this is just to give you a sense of the fact that it's almost quite range bound in its behavior. So we've got that range. I'm going to keep an eye on this. You can see here we've got a series of sort of high lows here. I want to see if it does stay above that. And if we do that, if we start to produce a very similar pattern to what we've seen here with the higher lows and ultimately leading to a breakout. It's possible. And in fact, I think that's the most likely scenario, and I would be looking for price to turn at these points to give me confirmation of that. If I then go and have a look at silver, silver's story is kind of different. You can see the level that it really battled with over here, and it's produced a series of low highs and low lows, and it seemingly wants to come back down and test a few of these items over here. So let's just go through. There's a bit of a level there. And these are, again, also mostly round numbers, $20 and $18 and so on. So it does appear as though this wants to weaken at the moment and possibly come down towards these levels. Okay, what I'm not seeing, guys, although we are in a period of inflation, I am not seeing silver creeping to the upside, for example. And I'm also not really seeing gold creep to the upside. So, it doesn't mean, by the way, that there wouldn't be a delay. It's possible that if the inflation gets worse and things change, it'll catch on. And then suddenly we'll see it start to do that. I'm just saying that for anyone who's told you there's a definite correlation between gold and inflation, it's not necessarily the case. And I know of several big institutions that have gold on their portfolio. When they've got really big portfolios and they need to ditch stuff, they'll ditch gold. So gold can be sold when you would expect it to be climbing. And so again, I think the important thing to take away here is if you are not seeing correlation with your own two eyes, then it isn't there. It doesn't matter if some guy from MSNBC or somebody else from whatever, some other analyst says they correlated and they expect it to go up. If you are not seeing it with your own two eyes, it isn't happening. Or ask yourself this: what would I need to see to know that it's happening? And I don't really see that. If we go to the weekly, let's have a look at the weekly chart here. We're in a downtrend. We are potentially going to find some support if that's going to be the case. And in that case, I would need to see a very strong bullish wick here and start to see price potentially work its way back up to that. Okay. But again, not really seeing anything. Gold is hovering around. It's not going anywhere. And this is part of the problem when it's used to trend. And I mean, this is the thing. Historically, gold was beautiful. It was always pretty much trending. And the last time it trended like that, it stopped in 2011. And then it trended down for a while. Now it's trending up again. But this goes back for decades. And so, and in fact, just frightening that in the last 20, 30 years, we've seen the price of gold go from, $200 an ounce to $1,800 just in the last 20, 30 years. And so, yeah, we could see price potentially start to come down to these lows. I really need to see evidence that gold is climbing, and I'm not seeing it. Silver, as I said, is also looking particularly weak. So I'm just not convinced at this time. I tell you what I would need to see. The other way to approach it was if I was concerned that gold was going to take off and I wouldn't be around, I could put a buy order in above certain levels, and then if there's a massive shoot up for whatever reason, then I would get taken into that trade. But it's pretty safe at this point. It doesn't really look like that unless something unexpected happens. So just again looking here at, say, platinum also coming down towards these lows. So generally, precious metals are not in demand at this time. Palladium also had a strong rejection there, coming back down. Okay, so this was when Russia invaded Ukraine. We saw wheat pop, we saw oil pop, we saw the ruble pop, we saw all these different things, and then we see that rejection, and price is back down here. not seeing a demand for it. So just really, it doesn't appear to be. We got wheat here. Let's have a look at wheat. Okay, again, what we're seeing here, I don't have a lot of data, but what you can see is that push up, and now wheat is coming back down. So, you know, there again, Ukraine being a major supplier of wheat, and it is a contributing factor to the global inflation at the moment, price of bread, and so on, plus, of course, Russia's supply of energy. There's a whole lot of things, but we can see right now, wheat appears to be coming back down. So the question for me isn't trying to necessarily try to explain this away, but rather just try to look for a most straightforward link. Why is wheat dropping? But it isn't just wheat. We can see gold is, metals or precious metals are dropping as well. And let's then go ahead and have a look at, so this is UK oil. We'll go ahead and have a look at UK oil. And UK oil is, what is this? I'll leave that for now. I'll have a look at that. It would be on the daily. No idea what that is supposed to be doing, so I'm just going to delete that. And so principally, this does appear to be climbing. Okay, it does appear to be going up, but it also is battling with this particular level now. I'm going to do this on a new chart. Okay, just a nice clean new chart. So overall, you know, we saw that price climb up, and there was a, I beg your pardon, spike. It's been knocked down. Let's go back up to that monthly. You can see that rejection, and it's creeping up a little bit higher. Okay, overall, if you just sort of blow your eyes and you look at this overall, you will see that just generally it's in a bit of a channel. It's generally drifting higher. Okay, for the time being, the only way to do that, for it to break that, would be for price to start to break these lows. So interesting to me, it's looking, this is possibly going to be the case. Again, part of this possibly also just the US dollar strengthening. This is the price of oil against the US dollar. And so if that dollar strengthens, we could potentially see the price coming down. So all of these are hinting at that dollar. I want to see, we're not through the level yet, but that is absolutely something to watch. If that level breaks, we would see a lot of movement in the market if this level breaks. So definitely a level to keep an eye on, because we would see lots of things move. We'd see gold, commodities, we'd see all of those move. It's also part of the explanation for why commodities are dropping. If the dollar is strengthening, we're going to see that. Okay, so I know that that wasn't necessarily on the slide deck to begin with, but they are connected. And as I was saying to you guys earlier, I would explain, you know, why the markets tend to have a correction. Why the markets tend to have this kind of correction. Look, we've had some issues here, but if we go back and let's have a look at, say, just want to clear these. Let's go through and have a look at the S&P. Okay, so fears of inflation were already being spoken about at the top here, and really only started when the central bank, when the Fed in the US started to say, okay, we you know, inflation's worse than we expected, or it's accelerating, and therefore we're going to accelerate our rate hikes. Then we can see the market started to respond to that. So one of the biggest, again, one of the biggest movers of currencies in the world is interest rate differentials between central banks, and one of the biggest movers of stocks is low interest rates. When you have low interest rates, you tend to have a lot of borrowing, and big institutions, especially when you have quantitative easing and stimulus cash, they will borrow as much as they can and put it into the stock market. So when you get all the companies borrowing stimulus cash and all putting it in, it's effectively a whole lot of companies buying stocks, and it tends to create a bit of a boom. As soon as the Fed starts to talk about instituting rate hikes or higher rates, interest rates, then all of a sudden it's really not worth their while. They're borrowing that money. They don't want to have to pay a lot more, so they tend to extricate themselves from those positions. And so you'll see a bit of a correction. A correction after rate hikes, after inflation, is expected. It's standard. You'll always get it. If you go back historically, that's always going to be the case. So especially what we have at the moment. And so this is something we need to just keep an eye on. What would be interesting to me, and again, a stronger dollar as well tends to be the case. So you can see the connection between the flow of the interest rates, inflation, the stronger dollar, what it's doing across most of the markets, and just appreciate that it's the most widely used currency in the world, and this is driving things. And this will ripple out to other countries around the world. to the UK, obviously they'll follow similar policies, and other central banks around the world. So it just helps give some general broad explanation as to why the markets will tend to do this. And so we can see it starting to potentially impact those. So if we just go back to crude oil, yes, my expectation for now is to see this, I beg your pardon, is to see this to continue to climb overall. And I don't usually use trend lines in that sense, but I do think they can be used as a general guide. So as a general guide, as long as price is above this, I expect it to be bullish. If it breaks down below this, starts to come down towards this level, then the game starts to change. And all of that is potentially likely to happen if we see something else happen. So I'm keeping this. This is why everything is largely connected. It isn't always connected. It's just connected at the moment as a result of inflation. Okay, so inflation has caused all those. Okay, cool. I'm just checking the questions to see if there were any. So yeah, so for now, especially when I see a rejection like this, I'm going to look to see if we're going to head a little bit lower there. The euro is looking quite weak. Dollar yen is looking quite strong. And we can see, even if we look at some of these, they're looking relatively bearish at this point in time. Let's go back to this and have a look at US oil, which is West Texas, and very similar. Here we go, very similar. Just going to get rid of that as well. You can see price, nice bearish engulfing there. Usually in isolation, that is a signal. Price will probably head back down towards here. We'll see if that's the case. Yeah, so I'm seeing just interesting. And again, also if we go and have a look, for example, at this yesterday, go back to that daily, you can see the strong bearish engulfing candle, also potentially signaling that the market is going to push down. So all of this being almost yesterday, we got that strong, clear signal. And that tends to be the thing that's driving it. Okay. And so for me, and this again, this is not financial advice, this is just kind of the approach that I would have, is that for me, I'm tending to want to do sort of shorter term trades where, for example, yes, I understand that if we have inflation and there could be something that happens to gold, if it does suddenly become popular as a hedging instrument again, then I would expect to see a turnaround. So until that time though, and again, I can start to put alerts in. If I need to put an alert in that lets me know if price is going to break above a certain level, or put an order in. Until that time, I'm more likely to look for shorting opportunities. And then I would look for the weakest, I'm then going to be looking for the weakest types of charts. So these are really heavy sell-off days. These are called momentum candles. So when you see a really full-bodied candle that closes near the lows, usually has very few small wicks. That's usually a case of just, that from the moment that candle opened, it was just heavy sell-off. And so that does appear to be what is happening right now. The market does appear to be pushing down. So a bit of a nice tweezer rejection up here, and then a strong rejection, and then a follow through on that. This would imply, I think looking at this now, this looks like this is certainly going down to here, if not even further down towards here, but almost certainly down to here, just based off that heavy sell-off. We'll see. And so that's looking quite interesting. I'm not seeing a lot of room here for growth to the upside, not seeing any signs of it, unless if you guys are, let me know, but I'm not seeing much of that. It does look very much as though these markets are kind of dwindling. And one thing I will do is keep an eye on these things here. So just sort of, let's just broadly put that line in the sand. Doesn't even have to be precise. I just need a general line to know if this is going to stay above it or below. For the most part, I like the idea of keeping things in a nice little box. What just happened there? There we go. Just bring these down. Just have a look at that and see what's going on. Yeah, just want to see if it stays within that range or not. We'll see. Any questions, guys? Any questions? Anything you want me to have a look at? Anything so far? So we're going to have a quick look at some of these other markets. I'd love to be able to say with satisfaction that as a hedging thing, I'm not seeing signs of that movement. and I'm not really seeing signs of expecting much growth. If I was to look at getting into gold now, I think it would be sensible for me to just relax and assume that it's going to stay in this area for a while, and that even if its path to breaking out to the upside is not going to be for several months, if not possibly until next year. And again, I need to be aware of that line in the sand with the dollar, because that appears to be something that, you know, is going to move the market substantially. But if it crosses that line, we'll see. So just, yeah, it's not super exciting and not super sexy. There's lots of other opportunities. The question is, you know, where would I be? And also oil, for example, I do feel that so far with this, it might drop a little bit, but it's similar. The behavior on these is very similar to the metals. The metals are all leaning down. Crude oil is leaning down. With that commodity, wheat's a commodity that's also leaning down. We can have a look and see what else we have. Let's just go through and see what are some of the other, that was really not meant to happen. I just loaded every single symbol up. Okay, let's just go find what we have. Let's just go down here. Energies, softs, we've got softs. Corn and sugar, wheat, orange juice, cocoa, coffee, cotton. Eesh. Anyway, so, okay, thank you for coming back to me. Market structure. I trade Bitcoin based on what the NASDAQ looks like, or would you trade each without factoring in correlation? Fantastic question, Jack. I've actually done previous webinars on that. If you drop me your email, I'll put in last week's one, but I absolutely, for me, factor a high degree of correlation in between cryptos and the indices. Absolutely, they're very highly correlated. I would be very surprised if we had a boom in equities, you know, later in the year and we didn't see cryptos recover from that. In principle, I know they're a new idea that we're still trying to, you know, the world is still trying to work out what they're going to be. I still think that cryptos are very much kind of here to stay. But the question is as to, you know, people are just tired of seeing them go up and down, but they tend to follow equities. Could I look at Swiss yen? I absolutely can. There we go. So how are we doing? Okay, managed to get that list sorted again. Let's go through and look at Swiss yen. Actually, one of the most amazing things about Swiss yen, right, was the chart. So where we go here, Swiss yen. Check out the monthly chart. Sorry, you got to see this. It's just been a very, I'll keep an eye on that if that's the date, or if that's the, that might be the intervention again. That looks about the right time, so strong intervention there. Both the Swiss and the Japanese, just absolutely crazy. And so you can see the strong push off, but I'd keep an eye on those levels. Let's go through and have a look at this. Okay, so a couple of things I want to talk about here. Notice that angle, nice, steady, sustainable. What you're seeing here is the perfect trend. When you see stuff like this, if I see something like this, I'm in. There is no way I wouldn't get involved in it. But what has just happened recently, just highlighting it, is parabolic again. It's accelerating. So that usually means that when it does eventually hit its top, it's probably going to have a correction. But that could be something that happens sort of 6 months from now. And again, you can see here as well. Sorry, you can see here. This is trending higher. Okay, you can see it trending higher. So these are very happy. There's no signs of divergence here. This is just heavily overextended. You can see how far it used to go. It would go about this far before it came back, this far before it came back. And this time it went quite far. It's relatively speaking overextended, but you can also see it's gone parabolic. So it's definitely going through something. All the yen pairs are. Let's go to the daily chart. Daily chart had a bit of a correction and is trending higher. We can see the MACD is trending higher and RSI is trending higher, but it does look as though it's starting to run a bit out of steam. See something here. That's the price. and that's a daily resistance. Yeah, so far it looks as though it's pretty keen to go. I would expect at some point, especially, I'm just going to put in a little bit of a level here. I think that's a little bit far enough away, but if we're going to have a look at it from a daily perspective, we could see the market attempt to push up to that, become very divergent, and then possibly have a correction after that. Overall, I have to say, one of the most beautiful quality trends. But it's happening because the Swiss is strengthening and the Japanese yen is weakening. So we're seeing quite a bit of, so of course they're the most extreme if you do that. I don't know if any of you use heat maps, but it's a very quick, easy way of determining, the weakest currency against the strongest, and then they often have a really good trend. And right now you've got, that's the case. So these two are producing like a perfect storm. You've got that very strong, healthy trend. A little bit overextended, as I said. Go to the 4 hour, for example. You can see a little bit of divergence starting to creep in here. So you've got, definitely got lower highs, but higher highs here. You've also got that move, big move, small pullback, suddenly a deeper pullback, and then a correction. Then it goes to a bit of a correction, and then it effectively broke out. So then it did breakout, trend up and up. And so that was a bit of a pause before it carried on. And again, you're starting to see a bit of that divergence creeping in. So it's on the slow down. Okay, look how steady it was here. It's not really the same just yet. It's starting to slow down a little bit. Let's go to the 1 hour just for out of interest sake. No, that seems okay, but I think it's starting to become more and more exhausted. There's a move up here, push, and another move and a rejection. So it'd probably keep trying to go for a little bit, but yeah, it's overdue for a bit of a breather. It's got a way to go. We'll have to see. There's nothing really stopping it, I don't think, from why can't it have a bit of a correction and carry on up, but we will see. So yeah, there's that strong correlation between the cryptos. Again, if I just go back to, let's go back to this one, and let's bring in, just to have a quick look for the sake of, out of interest, let's go and have a look at some of the cryptos. Let's look at Bitcoin. Bitcoin's really the major one at this point in time. Let's just keep an eye on that. So if you look at it continually heading lower, and then you compare that to the daily, yeah, it's just very similar overall. I think that they've, but it's obviously heavier on these as well. Quite interesting. I mean, I think I look at, I've got on my Twitter feed, which is mostly, I don't follow crypto stuff, but I got these crazy, suddenly just like 10 posts about Bitcoin now. It's about to kick off on the biggest bull run you've ever seen and blah, blah, blah. Anyway, and that's clearly people trying to either offload their positions or do something. But yeah, not seeing the evidence. We're now really at these lows. I'd love to see that turn around and start to really nice solid rejection of lows. So I do think that if there's a couple of possibilities on equities. This area where we are now is the first, I'll just draw a line through that, just generally. Remember how I was saying to you that something will be trending and trending and trending and then go parabolic. And then when it has a correction, it comes back generally in line with it. If that is the case here, we are approaching the kind of, I would say, the first area where I've just drawn a line sort of roughly through the middle. We're approaching the sort of first area where the market could go from here. So what I mean by that is it's either going to have a correction down to where it is now, or it could correct a little bit further. I don't know if it'll go beyond this. So that's why I'm saying this is the very first most feasible place where I think it's shed a lot of weight. It's come back down in line with that where it went parabolic, boom. It's come back down, and therefore this is not a bad place for it to try to turn around. And so that's interesting to me because when I look at cryptos and Bitcoin and stuff, they are obviously quite low on those things. So it'd be interesting to see if they start to stabilize where they are now. But actually, I hadn't looked at it in a couple of weeks. Kind of frightening to see where it is, that it's gone mostly down to zero. So what else, guys? We've got a couple of minutes left. I wanted to have a look at that. So it's, look, in terms of are there opportunities out there? But I think investment is, selling is never a great idea. Peter Lynch, who wrote this fantastic book called One Up on Wall Street, he's right, and a lot of people, Buffett and everything, agree with him. you've got three choices when the market's kind of tanking like it is now. You sell, you hold, or you buy. And selling is always the worst thing to do. It's always the worst thing to do. Holding is fine, and buying is also fine, either one of those, but selling is always the most panic. So in situations like this, I think, I'm seeing some really good stuff happen in currencies that are looking really nice. And again, doesn't mean you can't trade gold. If you're going to have a look at it, it doesn't mean, but it's just not the prettiest thing I've ever seen. It's just very erratic. Look at all, this is signs of indecision. This is where the market doesn't know what to do. It's got all these wicks above and below, which is unusual. It's not common to get that many wicks, except in areas where the market doesn't know what it's doing. So here it goes there, and then it goes up, and then it goes down, and then it's up. It doesn't really know what it's about right now. And so for me, for trading purposes, it's not ideal. But if you then, like you said, throw in Swiss yen, you've got something that's beautiful. And therefore, there is something, for me, safer, relatively speaking, safer to trade. Any last questions before we wrap up, guys? Anything else you'd like me to have a look at? Cool. Okay. All right. Well, there we go. So yeah, I know. I mean, I'd love to have said to you, that this is something that we can do. But I think looking at the conditions, and this is a question that we could have asked differently in previous situations. But looking at it now, I'm not seeing that correlation. If we start to see them climb, you need that high, low, high, high, or nice bullish weekly candle, or a nice bullish monthly candle. Look at how we've got a potential bullish like swing low here. So what's trying to happen? Sorry, on crude oil, what the market is trying to do is to find a bit of a base here. So if this had finished with a nice bullish candle, then I'd be expecting this to continue up. So bullish candle, as I said, we get that swing low here. This is usually a sign that the market is going to try to climb higher. And if it goes at the same kind of angle it did here, it's going to be up like that, something like that. And so it'd be interesting to see if that starts to happen. Does the same thing start to happen with gold? I don't worry too much about gold and silver. I would follow gold on its own. Looking at gold on its own, would we see a green candle and start to see price start to move higher, and possibly again at that same rate? So if it sort of goes up here over 3-4 candles, could be over there 3-4 candles. We'll see 3 or 4 candles from there up to there. We'll have to see if that's the case. Okay, I will. Thank you, Parish. I got your email. Thank you. And I will send you the recording, and somebody else asked for the recording. In case you want my email to ask for it, if you're shy, for example, just waiting for it. There we go. Just send it to Adam@TradeWithPrecision. Cool. If you want that, Trade with Precision, and send that through to me. I'll follow up. I will send. I think there were 2 people who asked for it. But in case you're worried I'll forget about you, you can send that through. Okay. Oops, I was going through with this. There we go. So what I wanted to do this evening was really just give you a broad overview of what's going on in the markets that we need to be aware of, which markets are kind of not really offering anything, which happens, and then a couple of markets that really are doing that. And it just so happened that the theme of tonight was like the markets are a bit meh. And in recent months, we've seen that spike as a result of a knee-jerk reaction, because now the world, I don't know if this is tragic on some level or not, but it seems as though the world has got bored of the Russia-Ukraine war. The danger hasn't gone away. And so it appears as though the market had that knee-jerk reaction, and then it's just kind of, okay, well, let's just go back to normal. It kind of looks like that, but it's not really the case. Sure enough, we're going to see how it plays out. So I would say, folks, yeah, if you're not seeing it in the markets, if you're not seeing it in the charts, then it isn't happening. So if you're not seeing the correlation, it isn't there. It's really important to remember that, because urban myths get started that way. People are convinced that one thing has to do the thing because the other thing's doing it. And if it doesn't, it doesn't. So I want to wish you a fantastic evening. I do hope you found this instructive and useful nonetheless. And I want to wish you, the rest of your week and weekend coming up. And I look forward to seeing you in future webinars. Thank you very, very much. I'm going to end the webinar now. If you have any questions with regards to your account or the platform, any issues you get stuck with, please get in touch with the lovely folks at IC Markets. And obviously they'll be very happy to help you and sort out any issues that you might have. And that's it. I'm going to leave you and end the webinar now, which is going to hoof us all out. Thank you very much.